Good morning, everybody. My name is Gareth Soloway, and this is the game plan. So here we are, another day in the new year, and volatility is back. We've seen a crypto flash crash. We're trying to see if it can recover right now. Stocks are down across the board today. Will they continue to go down? Will the dollar and yields continue to go up? We have economic data today at 10 a.m., JOLTS data. Remember, JOLTS data is important because it basically shows you job openings. And if we look at that, we can tell how strong or how weak the economic picture is for the jobs data on Friday. We have PMI data at 10 o'clock, and later today, we have the FOMC minutes. So that'll be at 2 p.m. Eastern time. Follow me over to the charts, guys. Let's get right into the charting action here. What we see right now is that the SPY is currently down again today. So it's hard to see, I know, but if we zoom in here, we can see that the pre-market data, again, is showing us, and I can actually go to the intraday chart here and flip over to extended hours, and we can see again right here, we are trading lower in the pre-market. Closed in this range here, we're now trading down here. Now, the interesting thing that I'm going to be watching, folks, is if we zoom out on this, look at where we are compared to yesterday. So the first and foremost thing, as a technician, what am I looking for today? Well, here's yesterday's low right there, okay? Do we take it out today? Or do we close above this level? So on a daily basis, do we make a closing lower low? If we do, now you have 2 consecutive down days with significance with a lower close on the second down day. That would be something that I would pay attention to. We don't know yet. I won't know until 4 p.m. today. Tune into Trading the Close with Tony Valier. We'll talk about it. I'm going to be on there today. Okay, so that's number one. Looking at the chart on the daily chart, quickly going over this. What do we see here? Well, we knew that we were into lots of resistance. It seemed like the market would never go down into the end of the year. As I explained yesterday, I think there were a lot of people that probably wanted to sell but didn't want to pay taxes in 2023, so they pushed it off to this year. I do think you're seeing some of that continuing to play out today. I also think that there's starting to be new fears out there. Yields are starting to go up. The dollar's starting to go up. Those are signals of rotation into safer assets, right? Being more careful. You're rotating into these type of things, being more, again, aware of the extracurricular global geopolitical picture out there. All right, so again, if we continue to pull back on this chart on the spiders, where would a downside reasonable target be? And the answer is pretty simple here, right? You start basically doing your fibs, and what I do, and this is exactly play-by-play, how I decipher this. So when I see a massive move up like this, and again, we know that the NASDAQ, biggest move since 1999 last year. S&P, not quite the biggest one, but nonetheless, still impressive move. So let's do our Fibonacci levels here, and we take it to the highest point. And what I do here is I say, okay, here's my fibs, and now in terms of a pullback, is there any Fibonacci level that aligns with a previous pivot point on the chart? And for instance, one of the things that I would pay attention to, for instance, right, so you have this high here, and then you have this high right here. Okay, so those are 2 major pivots, generally in the same location. The question again is, do they align with anything? And you can see right here, they do align with the 382 and the 236. So in general, I would start saying right in this vicinity, here is where your likely pullback is. That's between 460 on the SPY and 452. Now, what that does is it gives us a general target for a pullback early in the year before buyers likely will step up. The big question is, and this is going to be the big one, guys, and this is some great education, is that if we get into this scenario, and I'm going to rotate this chart away because I want to show you guys, right? So let's just say we do get a pullback, all right, from that high. So we have a big move up, and we hit resistance. We pull back a little bit. Now, you have to decide here, and this is what the chart is going to tell us, is are we going to head back up to new highs, or are we going to eventually roll over to lows? And the way you decipher that, folks, is based on the angle of the move. So when you have a drawdown like this, like it looks like we're starting to have, what you want to look for is, do we go straight back up like this, which would be bullish, or do we go more sideways, which shows an equal amount of buyers and sellers equaling essentially creating bearish consolidation. So this is where angles, I mean, again, so many people think charts are so easy, and they are once you learn the metrics of them. But essentially the angle means everything, and this is something I teach in the Winning Trader series, is that you have to start looking at the angle. This would be a bear flag. This would tell you downside. This would be a vertical move for a double top, or maybe it goes up like that, then consolidates, and then breaks out, and this would be the bull flag pattern, right? So essentially, once we get this pullback, we then start analyzing how price action is when it starts to bounce. Is it flatlining, sideways, or slightly higher, or is it a vertical buyers coming right back in and taking control of things? All right, so I just wanted to go over that. I think that's super important for us to understand as we pull back, because listen, I might have my bigger views that I think the economy is in trouble. I do think we're going to hit a recession, but honestly, I don't know. I mean, there's nothing that's written in stone. There's no crystal ball telling any of us exactly what the markets are going to do. And so what we do is we have our general view on the overall economic picture. Mine happens to be negative for 2024, but you don't know for sure, and that's where the charts guide you. The charts work and tell you. They give you insights into that. All right. So let's talk a little bit about the dollar chart. The dollar, again, is getting a bounce today, which makes sense, right? If the equity markets are down, if the futures are down, it tells us that the dollar's probably up. It's a run to safety, or it's at least an oversold bounce on the US dollar. Now, look at this line right here. Remember, we talked about this line. This was a long-term trend line, and I was like, okay, this really should be a major level where either we hold it or we break down, and we broke below it a little bit, and now we've recaptured it. And this is where, as a trader, you need to go back to the drawing board and you say, okay, well, that level obviously didn't turn out to be that amazing, right? Because if it was that amazing, we would have either bounced right at the level and gone up, or we would have gone down and broken down and only retraced to the level before falling further. So needless to say, that level was not the best level in the world. And that's what trading is about. That's what charting is about. You're not always going to find the best levels. Even myself, I've done this for 24 years now, and you still have to say to yourself, okay, so why did price bounce there? Why was this the low pivot before a bounce versus my line? My line must not have been the most prominent macro big level out there. So let's go back to the drawing board and let's take a look here, right? So let's see what we can find. And just looking at this chart, if I take another trend line and I see this high right here, right? So let's take a look. So we have this high right here and this high here, and then we kind of have a pivot here, and it almost, like, you could almost make a case that there's a line right down there. So that's what I do with my eyes. I start to look at other points. Where are the other points going? And essentially what we can see here is if we go back to the chart and I put a trend line here and I draw it down, look at what you get. And this is the coolest stuff about charting, is that it's almost like, it again, it reminds me of connect the dots, going back to being a kid where you kind of drew those shapes and you could connect these dots. You connect 1, 2, 3, and all of a sudden it comes out to be some animal, but you don't know early on what animal it's going to be. Same thing here. It's always kind of a figuring out type of thing. And so what we want to do now is we want to say, okay, now we know our most prominent line, right? And essentially what that is here to here, kisses here, goes right through this area, kisses this on the support side, and look at that, right down to that level. Now, having said that, where do we look for the target on the US dollar to be? So how high is it going to go? Now, the first thing I'm seeing is you have this pivot low, and if we draw that across, it's basically in alignment. So the dollar is into resistance here, but this would be only a minor level. Major levels are major pivot tops. Minor levels would be just little pivots right here on the chart that the dollar is running up into. Now, interestingly enough, we do have the Fed minutes today at 2 p.m. So let's see what the Fed says. Does it cause the dollar to start coming down? If that did happen, then you would anticipate the markets getting a bounce on that scenario. All right. Lots of golden education today, by the way. Really love this stuff. All right, a couple other things to go over. The 10-year yield, so far this level has held up well. Notice again, it did break and close below, but it never confirmed. Confirmation is one of the most powerful things that you will ever learn in the market. The rule of confirmation. It tells you if it's a real breakout or a fake out, real breakdown or fake down, essentially. All right, so in terms of a bounce, I've said this before. I said it yesterday again. We talked about how overdone the downside move was. You were due for a bounce. The technical level gave us that opportunity. Now it's a matter of saying, okay, well, where's the first resistance? Minor level, and then major level again right up in this 4.5 level right up here. So again, I do think that we could be in tune for into the next month or so, a bounce back to 4.5-ish, 4.4%, and that'll be interesting to see. Does that coexist with, remember, now the U.S. debt, and I've been saying this for a while, I give you guys updates on the U.S. debt almost daily. We have now crossed $34 trillion. At some point, I don't know if it's this year or next year, there will be more and more governments that don't want to rely and give us money because, you know, what are the odds of us actually paying that debt back without diluting our currency massively, which honestly is going to happen regardless, right? Okay, anyways, going on to a couple other charts, guys. I got a lot to cover today. Apple yesterday, remember I talked about the break of 185 level. We can clearly see that here was that level right here. It pierced the level and it did get a bounce. That was more for a day trade. It didn't work out perfectly in terms of, I was hoping it would hit early in the day. It hit late in the day. I don't like late in the day hits because it usually doesn't get the same velocity. Either way, the end of day rally in the stock market, we had a little pop back up. That helped boost it. Today, we're trading back at 184.34. Where's your next level on Apple? This pivot high right here, and that pivot high currently sits around 182. So if this flushes to 182 pierce today, let's say it breaks 182, I would be interested in picking this up. I actually think this level might be good for a 1 or 2 day bounce on Apple, not just a quick little, day trade. Day trade, yes, as well, but also a quick little trading opportunity. Okay, couple other charts to go over here. Coinbase, we got to talk about Coinbase, guys. Coinbase continues to collapse here. We obviously know, and I'm going to talk about the crypto collapse just in a minute, which is trying to recover. We'll look and see. But right now, you're down over $10, almost $12 more on Coinbase. And I talked about this. People actually were like, oh, Gareth's an idiot. They're going to make so much money because they're going to be, the holder for BlackRock. And I'm like, dude, BlackRock's not paying what you and I pay on Coinbase when they charge us, like a couple percentage points or whatever it is. It's ridiculous. So you have to understand that this was a perfectly coordinated call in the game plan talking about a short on Coinbase. Not only was it extended ridiculously, I mean, this is a ridiculous move up, but again, you just have to think logically of the steps throughout. Okay, again, ETFs out there that are spot-based, that takes business away. In fact, it might even take my business away. All right, do I want to put $1 million in a Coinbase account where it's not FDIC insured, where it's risky, where this, that, and the other thing? Or do I want to just do the ETF if I'm going to be long on Bitcoin? And that's the question that many people are going to ask. Again, you could say, oh, well, self-custody. Yeah, I mean, that's if you're into that stuff. But a lot of investors just want to trade it or invest in it, and they don't want to worry about going to bed at night and is their money still there the next day. Those type of things are important. Coinbase has to fix that problem if they're going to compete, and their margins are going to go down regardless. Just the nature of the beast. Where does Coinbase get interesting for a bounce? Right in here, guys. There's a level right in here around 125-ish to 130. This area right in here, to me, starts to get interesting just for a bounce. All right, next chart. Quickly touching base here. This is Microsoft. We talked about the bear flag on Microsoft. This is playing out as expected. Again, I was talking about this end of year, how this wasn't making new highs with the market and so on and so forth. And look at the bear flag. And then we started to see the flush yesterday. Today it is trading down just a bit as well. SMH, quickly touching base on this one. This was another great call here, guys. Trust me, end of year, the market makes you doubt yourself. The market works on your emotions. It works on my emotions. That's just the nature of how it is. But the charts are your friends. Will they be always right? No. But will they give you an edge? Yes. And clearly what we saw here, pivot low, right through here to pivot high, SMH right into it. We got the pullback yesterday, and we're seeing downside today. NVIDIA is down again as well. Again, beautiful little chart setup right there. Square, this is a great one, guys. I got to bring up my Square chart here. Square, if we recall, and these stocks are starting to fall apart here. All right, but again, Square, look at the trend line. I talked about this in the game plan as well. This was actually a couple months ago now. This is, by the way, the weekly chart. But look at the move into that trend line. Again, beautiful move into that trend line. Look at the bounce. And then I actually went short this with members of InTheMoneyStocks.com's verified investing alerts, because look at the move up right into double top. Ridiculous. This stock was trading at $40. It went to $80 in a matter of basically 2 months. That's straight up. That is not normal. All right, again, markets generally, they can be abnormal, they can be irrational for periods of time. Eventually, rational thinking comes back. And when you have a move of 100% in a multi-billion-dollar company, there's going to be some check back. Now, does it mean that I don't like the company? No, I couldn't frankly care less about the company. Investors and traders, shorter-term traders, they don't care. We don't care. I don't care about Tesla. I don't care about Apple. I'm in it to trade the charts. I'll go long, I'll go short, I'll go long, I'll go short. That's fine with me. It's overall looking at the chart and just being logical and saying double top, look at all those green weekly candles, you're going to have a little bit of a check back. And surely today it's down another $3, even not showing on this chart. All right, guys, so much to talk about. Another great example of this was Affirm. Affirm, again, basically was a $10 stock earlier this year. It went up to $50. I talked about how I am not a fan of the buy now, pay later stocks because, again, it tells us something about the economy. And then ultimately, these stocks, every cycle, if you go back to 2008, 2009, same thing happened. People lose their jobs, they can't pay later, and then these companies end up taking a massive dump. What we can see, again, is the chart went right up into the dual levels and is pulling back from 51, 52 bucks back down. I think today it's trading around 43, right down there. Yes, it'll have bounces, but ultimately these are stocks that are going to be troubled. Lastly, I know people were requesting China stocks. China stocks, guys, like Alibaba or the K-Web, which is the ETF, they are low on the charts valuation-wise. They make a lot of sense, but I've warned you guys before that there's a lot of worries here about, what China is going to do with Taiwan. You could debate that to the blue in the face. Doesn't matter. As a trader, as an investor, there's a risk involved. You have to do proper position size if you're going to do it. All right, President Xi, in his New Year's address, he talked about reunification. To Biden, he's mentioned it 3 or 4 times in just the last couple of weeks. We have the elections in Taiwan coming up. You just got to be a little bit careful here, in my opinion. Doesn't mean not to have a position, but just be smart about it. Like 1% of portfolio goes to 0. Okay, 1%. If it goes in triples, great trade, right? That's the way you have to think as an investor. All right, back to center screen, guys. We're going to take a quick 30-second break to thank NordVPN for being an awesome sponsor. Take it away.
Are you aware that someone could be watching you right now? Consider this. All of your data, your passwords, your entire identity could be exposed at this very moment. The best way to stop this is by using a VPN. NordVPN is more than just protection, it's peace of mind. Their threat protection blocks malware, trackers, and ads, keeping you safe from malicious downloads. Also, no more unwanted sales pitches or spam calls. Your privacy is non-negotiable. Please visit the link in the description and protect your future with NordVPN.
All right, guys, we're back. Check it out. Here's your intraday 10-minute chart of Bitcoin. You can see the cliff dive. This is what happens when people use leverage. It's great on the upside if we don't get pullbacks, but what happens is when you're using 25x leverage, you're going to get flushed here, and it's extra coins that are going to be sold. This is what, again, occurs when you have the leverage in the system. It's not unusual. Again, one of the things, and I talked about this yesterday on trading the close, if we flip over to the daily chart, I said yesterday, and you can go back and watch that trading the close, I said it is a weak breakout on Bitcoin. Now, so many people were like, well, how does he know that? And I talked about this with Tony yesterday, right? So basically what you had to see yesterday is you have all this hype coming up because the spot ETF is going to be approved, and we're hearing anywhere from today to Friday, right? Anywhere in this range. So Bitcoin was perfectly set up to break out above this high pivot. And sure enough, it did. But literally, look at the tail. Is that a strong breakout when you form a tail and price goes up to 46,000 but then closes barely above the previous high? And the answer is no. And you have to look at it and extrapolate, right? You have to say to yourself, okay, well, why? Why was this? Why did price get pushed back down here? And the answer is simply, there were sellers. And so if you have all the small investors so pumped about the Bitcoin ETF, they're not selling, guys. Let's be honest. The hodlers, all of those players are not going to sell. So who's selling? And the answer is big money. Big money is unloading into that breakout. They know that this is extra volume being caused right here on the breakout, and they are unloading into it. The fact that we barely closed above that previous high, it was a warning sign, again, given to you yesterday in trading the close, which I'll be on today at 3:55 p.m. Eastern time, and then look at the drop on Bitcoin today from basically 45,000 down to almost 41,000. 10% drops, a big drop. Now, I want to show you some levels here. There's no levels on the charts. We're going to create some right now for you guys. I'm going to basically take this pivot here, and we're going to stretch a line right through here and look at this trend line. This is the trend line that I care about as a technician. So again, just simply put, look at this trend line here, right? We have a trend line again with a pivot point here, all along here, to here, and we pierced it today. Now you're still above it. So in Bitcoin land, this is okay. Yes, it's a big pullback, but it is not donezo for Bitcoin. And by the way, when I say done, I just mean short term, like short term bigger correction or not like done. But in any case, you have your flat line up here. Let me add that in right now so we can have that on the chart. Let's put our flat line right across. And basically what we have here, if we flip back to the chart, is our little wedge pattern. You tried to break out. I would call this at this point a failed breakout, but you haven't broken down yet either. And that is the key on the Bitcoin chart. So can we break up and still go up to 48 to 50,000? I don't know. A lot of people calling for it now. Again, that was a chart level I came up with months and months and months ago, but ultimately still now everyone's saying it makes me wonder if it's really going to happen. Or are we going to see the bigger correction finally take hold, which sends us to 38,000? And then if that gets broken, we could go down as low as 30,000. 30,000 though, that is a level at this point I would be a buyer at. On Bitcoin, it would be a huge correction, and again, likely at least a swing trade opportunity. Okay, other coins obviously got crushed. I don't have time to go into that, guys, to be honest, but I just want to quickly touch on gold. Real quick on gold. Gold is pulling back today, so we still do not have a breakout on gold. And again, I want to see confirmation, not just a close above. We haven't even had a close above this level, but I want to see a close above with a confirming factor that tells me it's not a fake out. But once it breaks out, I think the money flies into gold and gold goes significantly higher. Taking a look at oil next. Let's go into oil. So oil is trading slightly positive today after 4 down days in a row. Makes sense that, again, it probably was due for a little bit of a bounce. We are kind of coming into this bottom level of support as well. And again, if we draw that line across, there's a lot of support right down here. Now, I will say this. If you look at the oil chart, this is a pivotal level, according to what I'm seeing, that we are holding at this point. And again, if I zoom out on this, I want to show this to you guys because this is a big deal. So if we go here, in fact, I'm going to flip over to the weekly chart. I think it's easier on the weekly to see. Essentially, what we have is a trend line right through here. Right? And again, I think we can all see this. This is going back to, by the way, 2019. So what we have clearly is that this is a pivot. And when you say pivot point, it means that if price is above it, maybe it goes up. And that's the likely scenario. But a pivot means that if you get below, then price could easily fall precipitously. Right now, you're still holding above this level. That is your pivot point. This is your fulcrum, essentially. This is that point where it goes one way or the other. So let's watch and see. It's right around $65 to $66. If we start trading down into that or below that, I would almost guarantee it's telling us a recession is on the horizon. Lastly, natural gas, guys. Again, I kind of try to touch base on this once a day. I know a lot of fans out there. Natural gas yesterday, again, kind of had a little bit of a pushback. It's starting to push back up again today. Right now, I'm looking for a good close on nat gas above this level and really a takeoff. I think, again, we could be looking at maybe a move back to $3 on natural gas. All right, guys, I would love to go into more charts out there. Let's flip back to center screen. But honestly, I just don't have the time. I got to get to the trading floor. And again, it is almost time for the stock market to open. Tune in today at 3:55 p.m. Eastern time for the live session of Trading the Close with Tony Valier. I'm going to be covering everything that happens today, the Fed minutes, all that stuff. Let's rock and roll, guys. I was looking forward to throwing this one today. Take care.